Hello and welcome to ET Budget Newsroom. Well, my name is Kshitij Anand, and today it has been a roller coaster Sunday. We could say that because all we have seen is the markets heading towards, you could say, 22,000 points drop and then stabilizing around about towards 600 points in intraday trade. Obviously, we don't have. Market is still not shut as of now, but definitely it has been a growth oriented budget, that is for sure. But there are near-term hiccups, we could say that, because we've seen some STT spike happening as premium on the STT is something which has actually troubled markets in the near term. I have Sunil Sanghai with us to take us through what exactly you feel about the budget, Sunil.
Thank you, Kshitij. As you rightly mentioned, that the Sunday, but I would say the Sunday well spent. The number of things have happened in the budget, particularly for practitioners like us, which is connected with the capital market. I would split this into three parts.
Sure,
Look at the fiscal part. So fiscal deficit, we are bang on target, 4.4%.
sure,
Last year, we did better than our target. Going forward, 4.3, the expectation market was expecting somewhere around 4.3 or 4.2. So we are well within the range. There is a bit of confusion about the gross borrowing number. I believe we will reconcile as we go along. We have a weekend really to
sure.
reconcile. As far as certain aspects which is impacting the market, particularly STT. So this, you look at totality, we had buyback which was taken out, right?
Right.
Now the buyback is back and
Mm.
the market was requiring it. I would put a rider on the buyback that we would request SEBI to review their regulation for buyback because
Sure.
SEBI had cut down. There were two methods, open market and tender route. They actually
Mm.
moved the open market and only the tender route, and it was not taken up because in any case from the taxation side it was not making sense. So we
Right.
would request SEBI to really chip in now and bring the buyback back again. So that is a counterbalancing. The third, as far as the corporate is concerned, there are number of initiatives.
Sure.
Look, one example of data center. So
Mm.
if anybody sets up a data center in India, there is a tax holiday up to 2047, and that
Right.
could for the global. So that
Mm.
would have a big impact on FDI. So in totality, we need to put this in the perspective that now
Mm.
the budget has become much more routine
Mm.
exercise, Kshitij,
Right.
than what 30 years ago. I've been watching budget from 1983. So at that time, everything used to come in the budget. Now the direct tax was taken care of outside.
Right. Right.
Direct tax was taken care of last year. Tax is taken out now.
Mm.
Uh, a lot of policy announcements happened outside the budget. So
Sure.
it has a very limited now exercise.
Absolutely. No, valid point there, Sunil. And let me also come to Naveen. He's just joined us. Naveen Kulkarni, who's a CIO, Access Securities PMS. Naveen, welcome to the show. And let me also, get your perspective as to, markets fell sharply after the budget despite strong capex numbers. We've seen spike in the capex number to nearly 1 lakh crore. You could say that, from the 11.11 lakh crores to now over 12 lakh crores. Is this reaction driven more by sentiments or just by fundamentals? What would be your take on that?
Yeah, so clearly the reactions have been driven by sentiments, right? So at one
Right.
point in time, market was down by probably 2.5% also. So and then we have seen some bit of pullback also coming. So if you see the markets for a while, the trading volumes have been little thinner, right? They have not been like
Sure.
really exciting. When
Mm.
the sell-off has happened, it's not happened on very large volumes. It has happened on quite thinner volumes. And when some
Right.
degree of institutional buying is coming, seeing opportunity, so we are seeing the pullback also happening. Important will be tomorrow because I don't think so there would have been significant FII participation, how they read into the
Right.
market, and especially let's say the STT hike because that impacts them
Mm.
also in some way because we have a lot of large trading uh, hedge funds who are there in India and how they would see that and whether their trading volumes could
Mm.
see an impact. So we could see some bit of more impact coming tomorrow. So tomorrow and probably next week is where the market should settle. Clearly, we have been in an oversold market and we have been seeing a little more selling. I think we should be okay from here.
Absolutely. Well, yes, we did see a knee-jerk reaction coming in where Sensex, sort of slipped more than 2,000 points. Nifty 50, slips below the 25,000 mark. But Amit also joined us. Amit Gupta was the CIO PMS Equities at Motilal Oswal Private Wealth Limited. Amit, welcome to the show. Well, I'm sure you've seen all the action on a Sunday. Not the Sunday probably you were looking for, but yes, it's a adventurous one. But as Naveen rightly pointed out, that much of the action will be probably, we'll see it in the coming week, starting Monday when the foreign portfolio participation will start coming in. So, how will sort of the steep increase in STT on FNO changes trading behavior for retail and proprietors? Because you track all these things very closely. Amit, over to you on that.
Yeah. So, see, this thing was very much there that the excessive leverage or excessive speculation, government was always looking to curb. So, number of
Yeah.
times the papers came from SEBI, how to curb it. And then the
Yes.
contract values were increased over the period, but they did not stop it, right?
Okay.
So, but we have also seen that excessive speculation leads to a lot of losses also to many, many players in the market. And I think this STD increase is an attack, you can say, directly on the high frequency trades or
Right.
on a low margin high frequency trades. That is what
Mm.
I would say. Because if you remember near the expiry, we used to have
Mm.
such an excessive volumes,
Mm.
and it happens on very low premiums, option premiums,
Sure.
right? Because we know that in options only, we are
Mm.
getting most of the volume in derivatives.
Exactly.
So it
Right.
is increase in futures, that is fine. But I
Mm.
think in options, the people who are doing 3 rupees, 2 rupees, so ultimately for every seller, we
Mm.
understand from the seller perspective, if there is an out of money option strike, then he is
Right.
writing, we can understand because you don't have that much of move in the
Mm.
index, but you understand from the buyer perspective. And I think if they are attacking those areas, then obviously
Mm.
it will impact the volumes of those. It's not that every broker is indulged in that. There may be few people who are indulged in that. So
Mm.
it is very, I think, targeted thing possibly on
Sure.
those areas. This is what I feel.
Absolutely. Valid point there. High frequency trading is something which is under the scanner. Sunil, let me get your perspective on the macro front. Does the sort of 4.3% fiscal deficit target strike the right balance between growth support and macro stability?
Very good question, Kshitij. I think, again, let me put this in the perspective. One is
Sure.
4.3, as I mentioned to you, was in line with what market was expecting. We
Mhm.
need to put that in the perspective that this is to be read with the capex. Now, the
Okay.
capex has gone up by 8-9%. Yes, the expectation, I saw the commentary, the expectation was more than 20% also. But of
Yeah.
course, the constraint of the revenue. The
Right.
third thing is that we are in a year where you have double cut on the tax. Direct tax, last year there was a significant cut on the direct tax, and
Right.
GST this year, right?
Mm.
And our revenue growth, I think approximately 10.4% was the revenue growth target taken for
Mm.
next year. The revenue growth is going to be subdued given the lower inflation, because that's how you
Mm.
the nominal GDP, and then you add on to that for the revenue
Right.
growth.
Right.
Given all this constraint,
Mm.
maintain 4.3, I think is remarkable. That's a positive job. Can I
Mm.
just take one more minute and add
Sure. Sure.
two
Absolutely.
more specific reforms? These things are hidden somewhere,
Ah.
and we need to really pull that out. One very interesting mention was on the banking sector reform,
Mm.
committee being set up for the banking sector.
Right.
We back to the banking sector, long back, we took a call that we will not allow corporates in the banking sector. We will not allow
Mm.
foreign banks to come and acquire Indian banks, which has started happening. I hope this comprehensive review actually includes all of that, because
Right.
we need capital in the banking. And for the growth of the economy, we need larger bank. And the government cannot keep supporting, and the capital market
Mm.
cannot keep supporting. We need large pockets of the capital coming into the banking sector. And therefore, the whole review of the ownership,
Mm.
voting right, the promoter, all of that. So that's one
Mm.
good mention. The
Mm.
second point was around uh, RBI FEMA guideline for non-debt. That's for equity.
Okay.
And that
Right.
impacts your FDI, because there are a number of valuation angles mentioned there. And this is again, it was a guideline which was set up in 2014-15, and it has not been
Okay.
yet thereafter.
Mm.
And these are all the irritants for
Mm.
inflow and outflow of the
Right.
direct investment. So some of those areas has been actually been talked about, which is very positive.
Absolutely. And, much of the money is sort of moving from, bank FDs to the equity market. That is also something which government has on its mind, how to sort of manage the liquidity in the banking system as well. Naveen, let me also, get your perspective, the point, where you left. I'll just pick up from there only. Because, today is a holiday. And do you see the post-budget sell-off as an overreaction to the STT hike or a sort of a genuine shift in the market structure now? Why I say that is because we've seen quite a bit of selling from the AFIs as well in the last year, 2025, more than 1.6 lakh crores sort of withdrawn. And then, so far in the month of Jan as well, the figure is close to 50,000 odd crores or between 40 to 50,000 odd crores. So how do you see that as, something happening in the coming week?
If you look at it, the hike in, let's say, security transaction tax, both on futures as well as options, the intrinsic value of the underlying doesn't change, right?
You're right.
Because when you're buying in the cash market, obviously that's what you are holding it for the long term and you're holding it for delivery, right? So that
Right.
intrinsic value doesn't change based on these parameters. So
Okay.
this reaction, obviously, broadly, in whichever way you want to look at it, whether
Hmm.
this or whether what happens with the FI participation or whether what happens with the hedge fund participation is going to be short-lived, because
Sure.
the intrinsic underlying value will depend on what is the growth
Hmm.
in the underlying profitability and the overall metrics, right? That
Okay.
doesn't seem to be changing. On the flip side, if I were to look at the budget, right? So
Right.
this is definitely, there is a focus on growth, right? If you
Right.
look at the capex numbers are up. More importantly, the split of the capex also looks a little more interesting. I think
Right.
it's more growth focused capex. Apart from that, fiscal deficit at 4.3%, none of these factors
Yes.
are uh, going to be prohibitive for growth, right? So they haven't significantly cut down anything. Borrowing, of course, continues to look quite okay. The
Right.
numbers, if I were to look at the budget numbers, they're not very, very aggressive at all, right? So it's
Exactly. Right.
unlikely that they will not meet their budget expectations or
Hmm.
estimates. So, broadly speaking, the budget is not a major factor. Yeah, the cut in STT is having an impact today. Maybe we'll have
Right.
for a few more days. But
Sure.
overall, all said and done, I don't see the underlying value changing. Underlying values for the assets are going to rise over the next 12 months. And
Sure.
probably this provides a good opportunity when the market is clearly also.
Right. Okay. I'll just quickly take one input from Amit, and we'll do one rapid fire as well before I close the session. So, Amit, for long only FIs, what matters more now? Valuation, earning visibility, or probably currency stability? I think everything is coming in between right now.
Yeah, so I think valuations and earnings, no doubt, for everyone, it is very important. For outside players also, they are continuously looking at what kind of earnings India is giving.
Sure.
And that was the primary reason why the other market started better when we had higher valuations relative to earnings, because both are relative.
Right.
And my sense is there are times when currency depreciates and it reaches to a certain level where it becomes so attractive for foreign players that
Right.
even if the index is not giving you returns, the currency little bit appreciation only gives you good returns. So I
Okay.
think that is where the stage is coming, possibly now going forward, because continuously outflows we have seen. I think at a certain level, and many things are getting factored in the currency, whether it is the Japanese bond yields or the
Hmm.
trade tariffs and all. My
Right.
sense is at a certain point,
Hmm.
you are very close where the FI money can coming in, and they will like 90 that particular level of USD INR.
Absolutely. Okay. Finally, let me start with Sunil sir. Sunil, one rapid fire from, let's say, out of you have to give you could say on a scale of 1 to 5, how would you rate this budget? Five being the best, one being yeah, the lowest.
No, I would say, Kshitij, instead of rating, what are the other areas which I would have liked to see in the budget? I
Ah,
think Gold is one area which we should at some point of time, but that can happen outside the budget also.
Exactly. Right.
Because that will have an impact on the foreign exchange, that will have an impact on the savings and everything else. But we should actually start looking at something around the gold. As far as the fisc is concerned, this government has been very focused on the fisc. So they balanced it really well despite increase in the capital expenditure and defense expenditure. And this time, our capex actually is larger than the borrowing. Normally, the capex is lower than the borrowing. So that's a positive sign. We are moving in the right direction from that debt to GDP ratio also.
Exactly.
So there are areas which we still have to work on, and I think this is an ongoing process. Budget is not, it's just one exercise. It's not really the everything.
Right. Absolutely. So I think, Sunil sir, from your side, how would that be? So 3 out of 5, 4 out of 5?
No, I would say it's a balanced budget. It's a
It's a balanced budget. It's a continuous.
continuation of what we have been doing, and obviously the expectations are always very high. But we really need to appreciate that there is very limited scope of the budget. It is not the way it used to be 10 years ago.
Absolutely. In fact, Nirmala Sitharaman as well acknowledged that we are operating in a tough external environment. So that is also something which comes at this point in time. Naveen, over to you, and then Amit.
Yeah, so from my perspective, let's say whatever expectations that I had from the budget, not very, very serious expectations that government will go do away with LTCG, none of those hyper expectations I had. So from my perspective, on a scale of expectations where the budget would be, it's a 5 and 5, right? So there is nothing seriously different I expected this budget to be. Overall, whether they could have done something better, maybe yes. But this is a balanced budget and they're doing the right thing. So I would, and the kind of environment that we are in and the currency headwinds that we are facing, trade that we are facing, this is definitely a 4 on 5 budget, right? So it's a pretty decent budget to look at. Market reaction seems to be a little bit over, which is probably putting it down towards 3, but I would say that this is a budget. 4
so 4 out of 5 from Naveen. Amit, quickly from your side.
No, I think if somebody was thinking sixes will be hit like a T20 match, it was not like that. My sense is it's a difficult pitch, something like playing on South African on Australian pitches, where you have to be very balanced and be prepared going forward. I think beyond budget also you will see the announcements as and when the geopolitical scenario is going to hit you.
Absolutely. Again, thank you for bringing the analogy of cricket and relating the stock market. Again, thank you so much for your time, gentlemen. It was lovely interacting with you. Thank you for joining us on the show. Then.
Thank you.
Thank you.